So when most people think about making money in the markets, it's usually the stock market that grabs all the headlines, right?
Yep.
All the volatility, the big names.
Yeah, the exciting stuff.
Exactly.
Yeah.
But lurking behind all that is this, well, enormous world of bonds. And it can be just as fascinating, maybe even carry just as much risk sometimes.
hmm
And today, you've pointed us towards this world with your suggestion, Mary Child's book, The Bond King. The full title is How One Man Made a Market, Built an Empire, and Lost It All. It's all about Bill Gross.
Exactly. Yeah, when you mentioned this one, it really jumped out. It's a great chance to, dig into not just the mechanics of the bond market, which can be pretty dense,
Oh, yeah.
but also the sheer force of personality, how one person can shape, well, basically an entire industry.
Yeah.
So we're going to try and pull out those key moments, maybe some surprising bits from Gross's journey.
And those insights that kind of make you go, uh-huh. So that's how it works behind the scenes.
Right. Trying to understand how those big financial wheels actually turn.
And what's really compelling, I think, is this almost classic American story. Gross, coming from what seems like a pretty ordinary Midwestern background.
Right. Simple roots.
And he becomes this absolute titan of finance, managing unbelievable amounts of money, wielding incredible influence.
And it wasn't like some grand plan from day one either.
No. The book makes it sound like he almost stumbled into the bond market, which was back then pretty underdeveloped.
Kind of a backwater, almost.
Yeah. And he was there right at the sort of dawn of its acceleration. And he helped, well, invent entirely new ways to trade these things, these bonds, that were once seen as really stable, maybe even boring investments.
That's such a key point. Back then, bonds really were seen as pretty dull, static bits of paper in a vault somewhere, especially at places like insurance companies.
Just hold them till they mature.
Exactly. But Gross, apparently he got inspired by this broker, Howard Rakoff, and he saw something different. He realized, okay, the face value might stay the same, but the price moves around with interest rates. Ah, okay. So that's the opportunity.
That's the opportunity for active trading, even if rates went up and the price dropped temporarily.
Okay, so this broker, Rakoff, he shows Gross this, detailed spreadsheet, right?
Yeah.
Showing the potential.
Yeah, laying it all out.
And Gross, he's working at Pacific Mutual, PAC Mutual, and he takes this idea upstairs. That must have been, well, a pretty unusual pitch for that time.
Oh, definitely going against the grain. Hugely unconventional. But, credit to PAC Mutual, they were willing to experiment a bit.
Okay.
They gave Gross what they call a pilot portfolio. $5 million.
Which sounds like a lot, but for a big insurance company.
Relatively small potatoes, yeah. A manageable risk to test this avant-garde idea, as Rakoff apparently called it.
And did it work?
It did. It started generating returns. Gross was actively trading, buying and selling, trying to capture those shifts in interest rates.
And that early success, that's what really paved the way for PIMCO, Pacific Investment Management Company. But it wasn't just Gross working along, was it? No, definitely not. The book really emphasizes this synergy, this three-legged stool, as they apparently called themselves.
Okay.
You had Gross, the trading genius, obviously. Then Jim Muzzy, who was the client guy bringing in the business, keeping investors happy, which is vital.
Super important.
And Bill Podlich, who focused on the business strategy, the structure, how to actually build and scale the thing. That balance seems really crucial, especially early on.
And pretty soon, they started landing some serious clients, right? You mentioned Southern California Edison, Albertsons.
Yeah.
But AT&T, that feels like a big one.
Oh, absolutely huge. So as PIMCO built up that track record from the initial $5 million, they started going after corporate pension funds.
Right.
And there was this legislation, ERISA, the Employee Retirement Income Security Act, in 74, that really helped professionalize managing pension money. Getting AT&T's business in 1977, that was massive validation. It showed this, relatively new firm out in California could handle the retirement funds for one of America's biggest companies.
Wow. That really signals a shift, doesn't it?
A huge shift in institutional investing.
So from those early days, basically having to prove that bonds could be actively traded, Gross builds this reputation. He starts making these big, sometimes really contrarian market calls. He wasn't afraid to, swim against the tide.
That's fundamental to his whole story, isn't it? The book talks about his unique ability to know when it was time to lean against that trend.
Got an example?
Yeah. The early 90s, after the savings and loan crisis, the Fed was keeping short-term rates really low, but long-term rates were sort of creeping up.
Right.
Gross made a big successful bet by selling long-term treasury bonds. These are, government bonds that mature way out in the future, so their prices are super sensitive to rate changes. He basically bet those long rates wouldn't stay that high.
And he won that bet.
He did.
And he wasn't just keeping these ideas inside PIMCO, was he? His Investment Outlook newsletter. That became a really big deal.
Huge. And what's fascinating is how he did it. He made these often really complex bond market ideas, well, accessible, engaging even.
How so? It wasn't just charts and data.
No, not at all. He'd weave in personal stories, quirky observations about life, sometimes even poetry.
Poetry about bonds.
Well, maybe not directly about bonds, but he'd connect, say, his son's Little League game to market volatility or a childhood memory to some economic trend.
That's different.
Very different and very effective. It broadened his audience way beyond just the bond nerds, Yeah. It absolutely helped build his personal brand and PIMCO's influence.
Definitely sounds unique for finance.
Okay, let's jump forward a bit. The lead up to the 2008 financial crisis. It sounds like PIMCO and Gross were among those who saw trouble brewing in the housing market relatively early.
They were, yeah. And it really shows the value of having different viewpoints inside a firm, doesn't it? PIMCO had made a lot of money over the years on mortgage-backed securities.
Right, bundling up home loans.
Exactly. But several people there, the book mentions Dan Ivison, Scott Simon, Paul McCulley were starting to get really worried.
McCulley, he was warning about a Minsky moment, wasn't he? He was. That's, the idea of a sudden collapse in asset values after a long period of speculation. And he was talking about the dangers in the shadow banking system.
Okay, remind us shadow banking is.
Basically, financial firms and markets operating outside the traditional regulated banking sector. Think certain investment funds, non-bank lenders, stuff like that.
Less oversight.
Much less oversight. And McCulley was arguing, pretty forcefully apparently in PIMCO's big investment meetings, that the risk building up there, especially in housing, was huge and could trigger a meltdown.
And Ivison and Simon were seeing bad lending practices firsthand.
Yeah, they were deep in the mortgage market, seeing what they called widespread lending malpractice. All these warnings together eventually convinced Gross, okay, we need to bet against this. A big contrarian call again.
So while the party was still going for many, PIMCO starts cutting back on those risky mortgage bonds, building up cash, betting the Fed would eventually have to cut rates.
Right. Smart move in hindsight.
But the book says it caused some pain initially.
Well, yeah. Imagine making that bearish bet, betting things will go down and the market keeps screaming higher.
Ouch.
Those riskier bonds they'd started selling, they kept rallying for a while. The Dow hit new records. So PIMCO's caution meant they were missing out on those gains temporarily. That definitely creates internal pressure questions, even if you think you're right long term.
Right. You start to doubt yourself. But then 2008 happened, Bear Stearns, Lehman Brothers, the dominoes started falling.
And suddenly, that defensive positioning looked brilliant. PIMCO's flagship fund, Total Return, as Morningstar noted, just crushed the competition in 2007. Huge positive returns when others were bleeding.
And Gross had this analogy, right, about card counting?
Yeah. Drawing on his old Vegas experiences, he likened PIMCO to being the house, systematically identifying and exploiting market inefficiencies, the mispricings, like counting cards, but in the bond market.
And right in the middle of all this chaos, Mohammed El-Erian comes on board, co-CEO alongside Gross.
It's extremely timely arrival. El-Erian brought, a different skill set, a different global perspective, really crucial for navigating the immediate crisis, but also for thinking strategically about what comes after.
The post-crisis world.
Exactly. And developing new products for that new environment. Plus, he was an exceptional communicator, which was vital when markets were so uncertain.
And the book mentions this incredibly bold bet PIMCO made during the crisis on Fannie Mae and Freddie Mac. That seems, wow, risky.
Hugely risky on the surface, yeah. These were the giants at the heart of the housing meltdown.
Right.
But PIMCO's calculation was that the U.S. government simply couldn't let them fail. They were just too big, too interconnected, too systemic.
So they bought their bonds.
Built a massive position, betting on a government bailout. And Gross was out there publicly in his outlooks in the media, basically arguing for that bailout, potentially influencing things.
Wow. And then after the dust settled, PIMCO coined this phrase, the new normal. What did they mean by that?
Essentially, their view was, look, the pre-crisis party is over. The era of easy growth, low rates, high leverage, that's gone.
Okay.
They expected a future of slower growth, more regulation, maybe deleveraging, a tougher environment for risk-taking.
Hmm.
Gross himself was pretty down on stocks back then, arguing bonds were the place to be in this new normal.
Interesting.
Yeah.
Okay, let's shift gears slightly. The ETF. Gross launches an exchange-traded fund version of his giant total return mutual fund.
He did, and the narrative was quite populist, wasn't it? About how his own mom couldn't invest in his main fund years ago because the minimums were too high.
Right, making it accessible.
Making it accessible. Now, the book does note, kind of wryly, that PIMCO had actually taken smaller investments before.
Okay, a little bit of marketing spin maybe.
Perhaps. But the ETF undeniably did lower the barrier for ordinary investors wanting a piece of the PIMCO strategy.
And there was this clever, maybe slightly controversial strategy they used initially with odd lots to juice the ETF's performance a bit.
Yeah, that was quite something. So odd lots are bond trades smaller than the standard institutional size, like under $1 million. They often trade at slightly worse prices, a bit cheaper to buy, a bit lower when you sell.
Okay, less liquid.
Exactly. PIMCO realized that for the new, smaller ETF, they could actively buy these odd lots at those slightly cheaper prices. And because the ETF was small then, those small price advantages actually had a noticeable impact on its total return.
So the ETF started outperforming the giant mutual fund it was supposed to mimic.
By a little bit, yeah.
Yeah.
Enough to make explaining the difference.
Right.
Well, the book calls it awkward. It benefited the ETF holders, but raised questions.
It definitely sounds like they were always hunting for those little edges.
Right.
Like that Ginnie Mae CDR futures trade the book talks about, led by Chris Dialinas. That sounds super complex.
Oh, incredibly complex and aggressive. It involved these futures contracts linked to Ginnie Mae mortgages, government-backed ones.
Right.
Dialinas and his team believed the market was mispricing the risk of homeowners paying off their mortgages early in these specific contracts. They figured they could potentially take physical delivery of the underlying bonds through the futures contract at a price that didn't fully reflect this prepayment risk.
Exploiting a flaw in the contract structure.
Essentially, yeah. Profiting from a deep, deep understanding of mortgage plumbing that most others probably didn't have or wouldn't risk trading on, really showed their expertise.
And all this success just kept feeding the beast, right? PIMCO grew enormous, almost $2 trillion in assets under management at its peak.
Just staggering growth.
That kind of size must create its own problems, though. The book mentions internal worries about PIMCO becoming too big to function.
It's a classic challenge, isn't it? How do you stay nimble? How do you keep finding winning ideas when you have to deploy that much capital? How do you manage the sheer complexity? Gross himself apparently worried about the trappings of size hindering things.
And the culture. The book paints a picture of this incredibly intense place, this devil's bargain, it calls it. Massive paychecks, but relentless pressure.
Yeah, that seems to be a core theme. The obsessive focus on performance, the crazy hours, the constant drive to beat the market. It clearly worked, generated huge returns for a long time.
But it took a toll.
It sounds like it. While it produced stars internally, like Dan Ivashin, who rose up, the book also talks about others burning out, leaving because the environment was just too demanding, too intense. That pressure, combined with Gross's very strong personality,
Created friction.
a lot of friction, it seems, especially in those later years.
Which brings us to the end game, Gross's departure. The book describes increasing tensions, maybe some erratic behavior.
It certainly details a period of escalating conflict, public spats, some very unusual investment outlooks that got people talking, just a growing sense of unease inside PIMCO.
And then Elian left. He was seen as the heir apparent, wasn't he?
By many, yes. His departure was a really big deal, signaling that things were seriously strained at the top.
And then, not long after, Gross himself is out, September 2014. Pretty abrupt. The book even mentions him calling Jeffrey Gundlach at Double Line, his big rival.
Yeah, that detail really underscores the drama of the moment. Calling your main competitor as things are falling apart, it was a seismic event for the entire financial world. Decades at the helm, then suddenly gone.
And there were consequences for PIMCO afterwards.
Yeah.
Regulatory scrutiny.
There was. The SEC issued a Wells notice indicating a potential enforcement action, though it related to the ETF pricing issues we discussed earlier. And personally for Gross, there was the messy divorce from his wife, Sue, and then he actually sued PIMCO.
Right. That lawsuit eventually settled, didn't it?
It did, yeah. Settled with a large donation to his family foundation.
So after all that, the trillions managed, the Bond King title, the whole PIMCO empire he built, how does the book sum up his legacy?
I think it gives him his due. It acknowledges his absolutely massive influence. He fundamentally changed the bond market, took it from this sleepy corner, and made it dynamic, central to global finance.
Can't argue with that.
He achieved, as the book says, incredible money, power, and fame. But it also notes his later reflections, where he seemed to acknowledge that he benefited hugely from investing during a particularly advantageous period, decades of generally falling interest rates, which is a huge tailwind for bond investors.
Interesting point.
And his views on success may be evolved, with more focus on philanthropy later on.
Yeah.
But despite the dramatic end at PIMCO, his mark on finance is just undeniable.
So reflecting on this whole story, this deep dive into Gross's career, what are the main takeaways for you? What really stands out?
Well, a few things, I think. First, the power of contrarian thinking, right? Being willing to bet against the crowd when your homework says you should.
Crucial.
Second, the rewards, but also the risks of that deep, almost obsessive market expertise, finding those complex edges like the Ginnie Mae trade. Third, just how critical leadership and the culture of a firm are. That intensity drove success, but maybe also sowed the seeds of later problems.
It's a sustainability question.
Exactly. And finally, maybe just how markets and dominance evolve. What works incredibly well for one long period might not be the formula forever. Things change.
Those are great points.
Yeah.
It really does bring home how much individual personalities, these big, bold figures, can shape what seem like objective financial markets.
Absolutely.
And it makes you think, doesn't it, about that balance between innovation and risk in finance. How much of Gross's incredible run was, pure genius versus being in the right place during a specific market cycle?
The right place, right time question, it's always there.
And what does it mean for the wider financial system when you have these dominant, larger-than-life figures driving so much capital? It definitely leaves you with a lot to chew on.
It really does. And look, for anyone listening who found this story of the bond king as fascinating as we did, maybe dig deeper into the 2008 crisis itself, or the way the bond market continues to evolve, or even check out biographies of other major players in finance. There's always more to learn.